door
Merge is
wide
here.
open. A crow
So,
flies in my house.
so
Jeez.
I'm going to call the meeting to order. We have
Okay.
Councilors Tweel, Bernard, Duran, and the deputy online, correct?
Yes.
Yep.
So it's been suggested, Councilors Tweel, Bernard, Duran, and deputy, if you're not speaking, just put your mic on mute. That way, it allows a better
Yeah,
flow
I
of the
don't.
meeting.
I don't know
Okay?
how.
I think
I don't know.
I think we all know to do that. We were
Yeah,
just
no,
chatting because
no,
the meeting hadn't
deputy,
started.
it's just a reminder. Thank you. Okay. We acknowledge, appreciate the land in which we gather is the traditional unceded territory of the Mi'kmaq First Nation, and we've occupied this territory since time immemorial. Call to order.
Your worship.
Any declarations of
Your
conflict
worship.
of interest?
Somebody
Okay,
might have to help Mitch. Somebody might
No.
have to help Mitchell
okay,
to mute his mic.
okay. Approval of agenda. I need someone to move.
Yeah, I
Moved
don't.
by Councillor Ramsey, second by Councillor McKinnon. All in favor?
In favor.
Aye.
Tweel, Bernard, Duran,
In favor. In favor.
Deputy.
Yes.
Okay.
In
Approval
favor.
of previous draft minutes, December 3rd, 2025. Oh, that's the other.
Moved.
Excuse me. It is. Okay. The report
Yep.
today is a presentation by Michelle Birch from MRSB. She's the auditor for the City of Charlottetown's financial statements and also our utility, water and wastewater utility. So Michelle, I think you know everybody around the table. And we'll let Michelle start off. Thank you. Go ahead, Michelle.
Your
Well, good
worship.
afternoon, everyone. Thank you for having me this afternoon to review the audited statements for the City of Charlottetown. So first of all, thank you on behalf of the firm for the opportunity to be auditors again this year for the city. So what I'll do this afternoon is go through two financial statements. One will be the Charlottetown Water and Sewer Corporation, and the second statement will be the City of Charlottetown Consolidated Financial Statement. So I believe everyone has these financial statements in their package. The first one that I will start with will be the Charlottetown Water and Sewer Corporation. So these are unconsolidated statements for March 31st, 2025. The first item that I will refer you to is the independent auditor's report, and this is issued to the mayor and the members of council. So under the opinion, it says that we've audited the financial statements of the Charlottetown Water and Sewer Corporation, which comprise the statement of financial position at March 31st, 2025, and the statements of operations, changes in net debt, and cash flow for the year then ended, and accompanying schedules and notes to the financial statements, including a summary of significant accounting policies. So in our opinion, the accompanying financial statements present fairly in all material respects the financial position of the Charlottetown Water and Sewer Corporation as at March 31st, 2025, and the results of its operations and its cash flows for the year that ended in accordance with the Canadian accounting standards for the public sector. So this opinion would be the same we have provided in previous years for the Charlottetown Water and Sewer Corporation. We call this an unqualified audit report and do give a clean bill of health in the audit for the Charlottetown Water and Sewer Corporation again this year. And the remainder of the report would be identical as the previous year, no changes in terms of roles and responsibilities. So then we'll start with the numbers on page number 4, which is a statement of financial position for the Charlottetown Water and Sewer Corporation. So this is at March 31st, 2025, which is the year end. And we also provide as a comparison for March of 2024. The first information is the financial assets. So these are assets that are liquid. They're in your bank or various bank accounts or will be in your account soon after the end of the year from collections. So for 2025, the financial assets are 17.8 million. The previous year, that was 19.6 million. Two of the significant items of change, first of all, is the line for cash. up from 5 million to 6.5 million. So those are amounts in the various bank accounts at the end of the year. And the other significant item that has changed is the due from related parties. So that's down from 11.8 million to 7.7 million. And these are amounts from city capital and from city revenue that have been borrowed by city capital and city revenue. And some amounts have been returned during the year. As you can see, the balance has reduced. So city revenue has returned approximately $4 million. And these numbers represent amounts that have been advanced or borrowed from the Charlottetown Water and Sewer Corporation, and for only cash flow purposes, just as need requires to transfer funds from one corporation to the other as needed. But at the end of March of 2025, the city capital and city revenue still does owe the corporation $7.7 million. The next information then is the liabilities for the Water and Sewer Corporation. For 2025, that total is $39.5 million. The previous year, that was $42.6 million. The first item is the accounts payable, and these would be the regular day-to-day balances outstanding. As you can see, they went down from 3.9 million to 2.3 million. The significant change relates to capital projects outstanding at the end of the year and holdbacks relating to those projects and obviously to contractors. Last year, that was over $2 million. The biggest portion of that relating to St. Peter's Road and Belvedere, Garfield reconstruction and Passmore Street. So that was over $2 million last year. And this year, that's about $800,000. So it's a timing of when various projects are completed and outstanding amounts are paid to contractors. The next significant liability would be deferred revenue. As you can see, it's similar between the 2 years, about 2.6 million. And that is the gas tax or Canada Community Building Fund that has been allocated to the Water and Sewer Corporation. And those amounts remain unspent at the end of March, so they are to be carried forward. There's no additional allocation of the CCBF or gas tax funds in this fiscal year to the corporation, so those are amounts that have been carried forward from previous years. And then the last item in liabilities is the due to related party. And this is down from 35.9 million to 34.4 million. And this all relates to loans that are related to the Water and Sewer Corporation. All the loans are in the name of the city. The city is obviously ultimately responsible for those balances and repayments. But each time there is a borrowing, there is a portion that is allocated to the utility corporation based on their capital projects. And the utility corporation does reimburse the city for those obligations each year. So the debt has gone down for the portion that is for the Water and Sewer Corporation from 35.9 to 34.4. So during the year, there was an additional 1.1 million advanced from Royal Bank of a total of almost 10 million that the city received in total. And then the other amount in terms of reducing is obviously making the regular repayments during the year. So overall, there is a reduction in the loan balances. So you have financial assets of 17.8 million, and you have total liabilities of 39.5 million. So the difference is the line that's identified as net debt. So your net debt is 21.6 million. Obviously, some resources or funds available to reduce that balance. And the previous year, the net debt was 22.9 million. So it has decreased from the previous year. So that's a positive trend of reducing the overall debt of the Water and Sewer Corporation about 1.2 million. The last part of the statement is the non-financial assets, and they include inventory of supplies, so at the pollution control plant and other parts and materials that are on hand for the corporation, about 2.9 million. And the other significant non-financial asset is the tangible capital assets or the infrastructure. of the Water and Sewer Corporation. And now they total $140.3 million, up from $137.9 million last year. And that is the result of approximately $5.4 million of new capital projects that were ongoing during this particular fiscal year. So about $3.9 million of that is for water systems, Passmore Street, Seaview Drive, Belvedere, and Garfield Street. And another significant amount of about $1.8 million for the primary digester roof rehab, and then, of course, smaller amounts for equipment or vehicles. So that's gone up with those capital projects. So you have non-financial assets of $143.3 million. You have net debt of $21.6 million, so that leaves the accumulated surplus at $121.6 million in total for the Water and Sewer Corporation. And as you can see, it's increased from $117.8 last year, an increase of approximately $3.8 million, which the majority of that is generated from new capital projects for this year. So the next page then is the statement of operations. So this is for, again, the year ended March 31st, 2025, compared to March of 2024. And this will provide you the details of the revenues, expenditures, and the overall operating surplus and annual surplus for the year. So the top information is the revenues for the year. So the budget for 2025 expected revenues would be about $15 million. The actual revenues were $15.5 million, so approximately $500,000 more than budget. And the previous year, the revenues were $15.4 million, so overall have increased approximately $100,000. Of course, the first line is the major source of revenue, which is metered sales. So the budget was $12.4 million. The actual revenues were $12.7 million, so approximately $360,000 more than budget. And last year, it was $12.47 million, so an increase of about $314,000. So this is a combination of a few items for the increase. First of all, there was a 3% increase effective April 1st, 2024. And the number of units have increased from 11,393 meters to 12,179 meters. So approximately 800 new customers on both water and sewer for the year. So that's also an additional amount of revenues from new units added from development within the city. The fire protection, City of Charlottetown, so that's $1.3 million as was budgeted. The wastewater treatment fees are the amounts that are from the town of Stratford for treatment fees, down a little bit from $543,000 to $491,000. Sludge handling up from $287,000 to $336,000, again with an increase in the rate per cubic meter. Most of the other items are down slightly. The unmetered sales down, with obviously those continuing to reduce, and services billed down from $269,000 to $205,000. So as I said, overall, the revenues are up approximately $100,000 from 2024 to 2025, and about $500,000 more than the budget. The next information then is the expenditures for the Water and Sewer Corporation. So the budget was $15.5 million. The actual expenditures were $14.2 million, so about $1.3 million less than budget. And last year, the expenditures were $13.5 million, so they've increased approximately $700,000. So some of the significant changes, so first of all, the amortization of tangible capital assets up from $3,020,000 to $3,083,000, and that would be, again, with those additional capital projects over $5 million during the year, and they start to amortize or depreciate in that year. The debt interest charges have increased from $1,264,000 to $1,363,000. So that's with the additional borrowings, a little over $1 million in this particular year. And as well, in the previous year, there was an additional $4.6 million that was borrowed, and that was only for a portion of the year. So this would be a full year, and that would increase the debt service costs, debt interest costs. Insurance and property taxes have gone up slightly from $179,000 to $196,000. Office and committee expenses have gone down from $787,000 to $774,000, and under budget, which was $919,000. So this includes the committee stipends, bad debts, professional fees, consulting fees. So the significant change is consulting fees are down from the previous year. Last year, there was approximately $50,000 in research projects or studies that were completed. The item that is up this year is a line identified as repairs and maintenance. So the budget was $3.7 million. The actual repairs were $3.1 million. And the previous year, that was $2.6 million. So an increase approximately $535,000 from 2024. So this would include equipment repairs, infrastructure upgrades and replacements, and building repairs and chemicals and supplies. So the reason for the increase is the equipment repairs have gone up approximately $230,000. Building repairs have increased approximately about $200,000 in terms of some three-phase power upgrade, as well as some lift station pump replacements. So those two items combined were about $125,000. And then additional costs in terms of infrastructure repairs and replacements. So this is the line that is increased. Utility costs are up from $1,353,000 to $1,407,000, so up about $54,000, and that mostly is power costs have increased. And then on the last expenditure would be wages and benefits for staff, down from $4,268,000 last year to $4,206,000, so down approximately $60,000, and it mostly relates to vacancies in administration and at the pollution control plant. Those wages down with those positions being vacant, and as you can see, the budget was at 4.7 to obviously fill all those positions. So overall, the expenses have increased approximately $700,000. So the overall operating surplus for the Water and Sewer Corporation for this year is $1,292,000, and the previous year that was $1,883,000, down from the previous year, just again with additional expenditures for the year. Then we have other revenues and expenditures for the Water and Sewer Corporation. First of all is the government transfers for capital at $1.4 million this year, and those are funds relating to that capital projects. So that would be funding from gas tax, about $80,000, and about $1.37 million from Investing in Canada Infrastructure Program for work done at Eastern Gateway lift station rehabs. Then we have the Municipal Capital Expenditure Grant, which is the 10% grant that comes from the province relating to capital spending, and that's $589,000 this year, approximately $600,000 last year. The pension plan for the Water and Sewer Corporation has a net revenue of $495,000 this year, and that would relate to positive increases in the investment returns on the plan assets during the year. So overall, there's other revenues of about $2.5 million, down from $4.1 last year, and it's in the government transfers for capital, where last year there was additional amounts from gas tax, about $1.4 million, and additional amounts from Investing in Canada Infrastructure, depending on the timing of capital projects. So overall, the annual surplus this year for the Water and Sewer Corporation is $3.8 million, and approximately $6 million from the previous year. So the line I do tend people to focus more on is the operating surplus line, because the other revenues and expenditures can obviously fluctuate depending on the capital projects that you may have. And obviously the pension plan, which is, somewhat out of your control in terms of how investments might do. So overall, you did have an operating surplus for the year of $1,292,000. I'm going to get you to go over a couple pages here. So we'll go to page number 13, which gives you the details of the pension plan. So as I said, overall, there's a net kind of increase in the pension plan for the Water and Sewer Corporation. The benefit obligation is about $9 million, $9,020,000 at the end of 2025. So that is the amount owing to staff based on present service and potential benefits. But the plan assets had about $10.6 million at the end of March. There is some adjustments for gains or losses of about $1.2 million. So there's overall an accrued pension asset of $368,000, so it is fully funded. And a positive, as I said, amount reflected in other revenues for the year with increase in the expected investment returns for the year. On the next page, on page 14, is at the top there, the details of the deferred revenue, which, as I mentioned, is the gas tax or Canada Community Building Fund amounts that have been allocated to the Water and Sewer Corporation. So there is $2.6 million available for the Water and Sewer Corporation to carry forward for those approved capital projects under the CCBF. Right below that, in note number 11, is the due to related party. And the following amounts are loans that are held by the City of Charlottetown, for which a portion has been allocated to the Water and Sewer Corporation. The City of Charlottetown is responsible for all payments on these loans, and the payment is recovered from the Water and Sewer Corporation. So all of the loans outstanding that have been allocated to the Water and Sewer Corporation are noted here. As you can see, there is one that has increased. It's the third one. The Royal Bank of Canada Bankers Acceptance went up from $4.5 million to $5.6, and that was an additional advance, as I mentioned, of approximately $1.1 million. They do continue on the next page, on page 15, so a total of $34.4 million. And the previous year, that was $35.9 million. As I mentioned, an additional advance of about 1.1, and then repayments. As you can see, over the next 5 years, the payments on those loans as they are now will increase from about $2.3 million to almost $2.7 million, with more being paid towards principal and less to interest over time. And then thereafter amount about $21.8 million, because obviously not all the loans are due within 5 years. They will be, a multi-year of repayment. The last item that I'll refer you to, or second last, I think, will be on page 17, in terms of note number 17, the accumulated surplus. So on the first and second page of the financial statements, we did indicate overall the accumulated surplus is $121.6 million this year, up from $117.8 in the previous year, an increase of $3.8 million. So important to break down that surplus, with the majority of that being invested in tangible capital assets already being invested. The money has been obviously spent in that various infrastructure. And what will happen over time is that number will reduce with depreciation or amortization. So the unrestricted surplus for the Water and Sewer Corporation is approximately $15 million. And as you can see, that's very consistent with the amount last year. So not a significant change in the overall accessible surplus for the Water and Sewer Corporation. The last item I will refer you to is on the very last page. So that's page 19. So this is the information on the tangible capital assets for the Water and Sewer Corporation. So this would include and identify all the major assets, all the infrastructure in terms of land improvement, water, sewer, and the treatment plant, buildings, equipment, and vehicles. So at the beginning of the year, that investment was $196 million. During the year, as I mentioned, about $5.4 million was additional amounts. So you can see there's $3.8 million in water, sewer, and the treatment plant. As I said, that was for water systems. The building additions of about $1.8 million was the digester roof rehab, and then some amounts for equipment and vehicles. So now at the end of the year, the total investment for all of that infrastructure is $201.4 million for the Water and Sewer Corporation. During the year, there was about $3 million of amortization, and now the net book value at the end of the year is $140.3 million. The previous year has information right below that, all the same categories, and as you can see, there was about $7.4 million also spent on capital projects for the Water and Sewer Corporation in 2024. So those are the statements for the Water and Sewer Corporation. Perhaps I'll open up the floor now for any questions on that particular statement first.
Any questions? Is there anybody?
I have a question.
Yeah, Councillor Tweel?
Thank you, Michelle, for your presentation. What I'd like to know is the impact and effect of the water and sewer strike that we just experienced. Was there a cost savings from an employee perspective? What was the overall impact of the strike, and is the strike whether it be from an operational or additional expenditures, is that impact illustrated in this presentation of the audit?
Well, no, obviously, these statements go to March 31st, and obviously, the impact of that potential strike was well after these financial statements. So at this point, we don't reflect anything at all in terms of what the impact financially might have been from that. That will be in next year's financial statements.
Yeah. Councillor Twill,
Oh,
we're dealing
okay.
with the
Yes.
fiscal year 24-25, and that fiscal year ended March 31st, 2025. The new fiscal year, which is we're in now, 25-26, when Michelle comes back to do the audit next year, that will be a question that could be asked.
That'll be factored into the statements for. You're still talking 2025 but you're right. It probably goes
25,
up
26.
into the fall of 25. Is that
No,
safe to say,
No,
Michelle?
it'll go to March 31st, 2026. So the fiscal year is March
March
31st every
okay.
year.
Yeah.
Okay. So anyway, it's not illustrated in this year's audited
No,
statements.
No.
that's for next year.
Okay.
Thank you.
No, that's fine. Thank you. Thank you.
Any other questions? Michelle, just to go back to capital expenditures.
Yes.
So for 24-25, I'm looking at the budget document. Water and sewer utility was 16,959,000.
Correct.
And you stated there just in the last part that we spent
5.4 million.
5.4. So, Michelle, I know you're going to be going into the consolidated statements, but when I look at fiscal services for last year, 24-25, we budgeted $13.5 million, which was depreciation and interest on long-term debt. So that was based on spending that whole $16 million. And I think that's, Councillor Bernard, that's what you've said in the past, is that we're really we're setting a high bar in terms of financing our debt, but we always do.
Correct.
I've been here 8 years or 7 years in this position and 6 years in council, and rarely have we spent the total capital budget, but we do amortize for it.
You only amortize
That's
for
right.
what was actually completed, though.
Right.
What you use.
Go ahead.
Yeah, what you use, yeah. You just amortize what you use.
Correct. Correct. But in terms of budgeting, we have to budget it for the full amount, correct, Michelle?
Yes, and I think the issue has always been, that's what you hope will get completed in the year, but there's always challenges in terms of timeframes of when there's contractors available, when work will get done. And that's been a consistent theme, I think, is just a lot of that budget every year is a carry forward, and will probably always continue that way, just in terms of timing and when projects will be completed.
Okay. Councillor Bernard?
No, I had all my questions answered yesterday.
Good. Good to move on?
Thank you.
So, Michelle, did you want to go to the consolidated statements?
Yes.
Can we match up with our digital copy for presentation? Well, if I go to the consolidated statements, it's the first statements. I think it's page 10 in our digital copy.
Oh,
Is this the consolidated state? Is that what you're going to
yes,
next?
I'll do those next, yeah.
Yeah. So it's starts at page 10. If you want to read over
Okay.
the audited
Yes.
responsibility.
Yes, okay. What I will do at the outset is just to kind of explain, when we're talking about consolidated financial statements, what's actually consolidated or combined in these particular financial statements for the city. So it obviously includes the city. It includes the water and sewer, that would be the same information we just saw. It includes the carry because the city has the control over that organization in terms of the ability to appoint directors, and obviously is ultimately responsible for the majority of deficit and capital. It also includes 80% of the Civic Center, relating to that relationship as well in terms of appointing directors and obligations there. And we'll also see that it includes 15% of the profits of CADC and various other boards and such other committees that obviously are accountable to the city of Charlottetown. So when we're talking about these consolidated financial statements, all of those entities are included and combined here. So this next statement that we are going to go through is the consolidated financial statements for the city of Charlottetown. So again, this would be for the year ended March 31st, 2025. And I will start with the auditor's, independent auditor's report. So that's on page 2, numbered. So it's issued to the mayor and the members of council. So under the opinion, it says that we've audited the consolidated financial statements of the city of Charlottetown, which comprise the consolidated statement of financial position at March 31st, 2025, and the consolidated statements of operations, changes in net debt, and cash flow for the year that ended, and accompanying schedules and notes to the financial statements, including a summary of significant accounting policies. So in our opinion, the company consolidated financial statement present fairly in all material respects the financial position of the city of Charlottetown at March 31st, 2025, and the results of its operations and its cash flows for the year that ended in accordance with the Canadian accounting standards for the public sector. So again, same report as we just referred to for the Charlottetown Water and Sewer Corporation. This is a clean audit opinion for the city of Charlottetown, giving an unqualified audit opinion again this year. The remainder of the report as well would be identical to the previous year in terms of roles and responsibilities. So then we'll start with the numbers on page number 4 of my copy identified. So this is the consolidated statement of financial position, again at March 31st, 2025, which is the fiscal year end for the city, and compared to the previous year, March of 2024 as a comparison. So the first numbers are financial assets. Again, those assets that are liquid in your bank account or will be soon after the end of the year. So for March of 2025, that's 24.8 million. Last year, that was 44.6 million. So approximately a $20 million increase from the previous year. Very easy to see that it's the first line there identified as cash. So last year, that was almost $16 million. This year, we'll see in a moment that that is an overall bank indebtedness or borrowing. At the end of the previous year, that was a positive number with an additional borrowing close to the end of the year from the Royal Bank. Almost $49 million was borrowed at that point, and there was additional funds that were advanced and obviously were in your bank account at the end of the year. To be available to pay out for some major capital projects that did come into this year, Simmons being the biggest one. So at the end of last year, you did have additional funds in your bank accounts because of having borrowed that full amount that was required. Then we have accounts receivable, which are amounts outstanding, down a little bit from 7 million to 5.9, and government funding receivable down from 12.9 million to 10 million. So that's various levels of government outstanding balances at the end of March. And the other kind of two significant financial assets, the investment in the government business enterprise, now up from 2 million to 2.2 million. Again, that is, again, with the city having a 15% investment or ownership in CADC. That increase reflects the 15% of profit that is for the city of Charlottetown based on their profits for the year. And the last significant financial asset would be the loans receivable, down from 6.8 million to 6.2 million. And this would all be the switch loans which have been advanced to residents. So this particular year, you can see it's down from 6.8 million to 6.2. So this is the final year of advances of those loans. So there was about $900,000 advanced during the year, and then repayments during the year of about 1.4 million from residents. So 6.2 million outstanding at the end of March. So overall, as I said, financial assets down about 20 million, with the cash balance being the significant decrease there. The next section is the liability. So at the end of March of 2025, that's 180.5 million. Last year was 177.2 million, so that's an increase from the previous year. One of the items, as you can see, is the bank indebtedness line. So now at the end of this year, there is an overall overdraft with all accounts combined of 5.9 million. And that means that essentially at the end of the year, there was $20 million of line of credit advances and about 15 million actually in the bank accounts at the end of the year. So overall bank borrowings this year. The accounts payable are down from 33.5 million to 25.3 million. Again, a lot of this would, similar to the Water and Sewer Corporation, would be relating to capital projects and funding. So at the end of this year, there was about $2 million of capital amounts outstanding for contractor suppliers, where last year that was 5.2 million. And that, again, a lot to do with Simmons and completion of that project. Then we have the deferred revenue, so that's up from 9.4 million to 10.4 million. So that is a combination of, first of all, from CMHC, the Housing Accelerator Fund. The city has about 5.1 million received at the end of March that hadn't been spent, and about $2.8 million of Canada Community Building Fund or gas tax funds, again, to carry forward. And about $1 million relating to the switch or the tourism accommodation levy funds that are also unspent and carry forward. Then we have the sick leave and post-employment benefits. So for staff that are entitled to sick leave, so many days per month, as well as a post-employment benefit based on years of service, that has increased about $400,000 for this year, and that would be another year of service for employees. And then the last significant item in liabilities would be the long-term debt, up from 127 million to 131.2 million. So during this year, there was two additional loan advances. One with Royal Bank was about $8.2 million additional for the city, about 1.1 million for the utility. And also another additional $1.6 million was borrowed from the Federation of Canadian Municipalities for energy upgrades. So that those two additional loans have obviously increased the overall long-term debt for the city on a consolidated basis. So overall, the liabilities of the city on a consolidated basis are 180.5 million this year, 177.2 last year. So with financial assets of 24.8 million, total liabilities of 180.5 million. The overall net debt is 155.6 million, increase from 132 million dollars in the previous year. Again, to do with obviously more borrowings on line of credit and additional long-term debt that has been borrowed. Then we have the non-financial assets. So the tangible capital assets now are at 409.1 million, up from 372 million in the previous year. So that relates to about $67 million of capital spending by the city during the year. And then, as we just saw, 5.4 million for the utility. So of that 67 million, the majority of that is about 33 million is for Simmons, about $14 million in road infrastructure, about $3 million in sidewalks. So those are the significant capital projects for the city in the past year. Then we have inventory of supplies, which is 3.8 million. And so overall, the non-financial assets are 414.3 million. And the previous year, that was 377 million. So again, up with those capital projects. And so with 414 million of non-financial assets, a net debt of 155 million, the overall surplus of the city of Charlottetown on a consolidated basis now is at 258.6 million, up from 244 million in the previous year, so an increase of approximately 14 million in total. So then on the next page is the statement of operations, the consolidated statement of operations, which will give you the details of the revenues, expenditures, the operating surplus, and overall accumulated surplus for the year. So the first information is the revenues. So the budget for 2025 was 97.4 million. The actual revenues were 100.7 million, so you are up over the budget approximately 3.5 million. And the previous year, the revenues were 101.4 million. So revenues are down from the previous year in total. As you can see, approximately 700,000. The very first line is obviously the most significant portion of revenues for the city of Charlottetown, which is property taxes. So the budget was 46 million. The actual revenues were 47.2 million. And the previous year, that was 43.8 million. So an increase approximately $3.3 million. So there was not a change in the tax rate in this fiscal year, 24-25. So those increases entirely relate to additional development within the city, new projects, new building. So those have increased the overall property tax revenue to 47.2. The next line is the government transfers for operations. So that was budgeted at 20.3 million. The actual is 21.5 million, and the previous year, that was 26.8 million. The most significant number included in that amount this year is the municipal support grant, which is about 20 million, 21 million in total. And the previous year would have been similar in terms of approximately 20 million in total. So the reason for the change and decrease from the previous year, approximately 5 million, was in the previous year that included funding from CMHC Rapid Housing Initiative of $5 million, and that was all used towards 470 Malpeque Road, a joint housing project. So we'll see in a minute, this is the revenue, we'll see in a minute corresponding expenditure and no net impact to the city. But it does show revenues have decreased here in that category. Water and sewer revenues, as we just saw, up about 100,000 from the previous year, 14.1 million in total. Recreation revenues down just slightly from 6,034,000 to 6 million. So this would include the city programs, carry recreation revenues at 3.8 million. Eastlink revenues of 1.3 million. So it's the Eastlink revenues that are down approximately 200,000 from the previous year. Licenses, the next line, from 1.8 million to 3.6 million, an increase of 1.7 million in total. So this would be additional permits, approvals, additional building within the city, so that's increased. Police protection services, those revenues have decreased just slightly from 3,266,000 to 3,194,000, but up over budget. So this would be tickets, court fines, and then government funding for police protection. The tourism accommodation levy would be the next revenue. So the budget was 2 million. The actual revenues collected was 2.4 million, and that is up from 2.27 the previous year. So an increase, obviously, reflective of additional tourism. Interest and other has gone down slightly from 1.7 million to 1.5 million. So these would be all amounts relating to rentals, interest, other sources of revenue, various sponsorships. So down from the previous year, the most significant probably is just some additional funding last year from ACOA, active transportation, and a rebate from workers' compensation, which was about 200,000. The SWITCH program, so that is down, winding up that program. So this is the final grant from Federation of Canadian Municipalities for that program. Parking down from the previous year with a reduction in spaces. And then finally, the net income from CADC, your 15% of the profit of CADC, 165,000 this year. It was 204,000 last year. So overall, as I said, revenues have decreased from the previous year. The next information then is the expenditures, again on a consolidated basis. So the budget for expenditures was 105.5 million. The actual expenditures were 100.6 million, so under budget from what was approved. And the previous year, the expenditures were 98 million. So expenditures have increased approximately 2.5 million during this particular year. So a couple of the significant changes. So the amortization of tangible capital assets has gone up from 12.4 million to 13.8 million, an increase of about 1.4 million. So that would relate to, about 70 million of additional capital projects during the year. Development, heritage, and other. So those expenditures, as you can see, have decreased about 3.9 million. and that would relate to, as I just mentioned, the project for the Rapid Housing Initiative. So $5 million last year was included in that $15 million paid for that joint housing project contribution. This also includes about $2.9 million of transit, various event funding, and for grants. But the significant increase is that contribution to the housing initiative last year. General government, those are similar under budget from 10.6 million to 9.3, and last year the expenditures were about 9.1 million. So this would include salaries and operational costs relating to general government. So salaries did increase approximately 600,000, but in terms of other expenditures, they have decreased in terms of some costs relating to professional fees, consulting, and some short-term interest last year. Then we have the interest on the long-term debt, a budget of 5.5 million, the actual at 4.9, and last year at 3.4, so an increase of about 1.5 million. So this would relate to the additional debt borrowing during the year, as I mentioned, approximately $10 million from RBC, 1.6 million from the Federation of Canadian Municipalities, and also the full year impact of the $49 million borrowed from RBC in the previous year, which was only for a number of months last year and now a full year. Then we have the parks and recreation. So those expenses have gone up from 10 million to about 11.2 million, an increase of about 1.2 million. So this does include the city park and recreation. It does include Carey and Eastlink in terms of wages and operating costs. So wages overall have increased approximately 600,000 between the city and Carey and Civic Centre. And the operating costs for Carey and Civic Centre have gone up approximately $500,000 as well. The next line is the protective services, the budget at 20.1 million, the actual expenditures at 18.3, and the previous year at 16.7. So they've increased approximately 1.5 million. And the majority of that is in salary increases between the fire department and the police department, salary increases where operating costs have remained relatively similar. Then we have the street maintenance and environment, the budget at 20.7 million, the actual at 18.4 million, and the previous year at 17.2 million, an increase of 1.2 million. So again, salaries have increased approximately 500,000. Snow removal is obviously a significant component of this budget line, about $4.5 million this year, $4 million last year, so that's an increase of 500,000. Also includes the street cleaning and patching, which is about $1 million in both years, and street lighting, which is about $1 million in both years as well. Similar to the revenue, the switch program costs have obviously gone down and at the end of the program, so this would be the final cost for administration costs, mostly to Pace Atlantic. The tourism accommodation levy, so the budget was 2 million. What was paid out was 2.3 million. So those are amounts paid to Discover Charlottetown, meetings and conventions, for surf events, and for grants. So obviously above the levy collected was 2.45 million. What was paid out was 2,345,000. And then finally, as the numbers we just saw for the water and sewer, those expenses increased from 8.9 million to 9.5. As we just saw in those statements, that major increase relates to repairs and maintenance. So overall, the expenditures up about 2.5 million on a consolidated basis from 98 million to 100.6 million. So the overall operating surplus for the year on a consolidated basis is 96,000 for 2024-25, and the previous year that was 3.3 million. So as noted, obviously revenues are down and expenditures have increased about 2.5 million. So the change from the previous year is a combination of that. Then the other revenues and expenditures, so the government transfers for capital this year at $9.4 million. So that includes about $1.2 million of gas tax funding and the additional amount of about $6.8 million of money from Investing in Canada Infrastructure, which most of that was for Simmons, for new buses, and Eastern Gateway. Then we also have the municipal capital expenditure grant, which is about 4.9 million this year, from 4.2 million last year, and that's the 10% grant that comes from the province, and that relates to any capital spending that you have. The pension, as we just saw, was a positive overall net result on the water and sewer of 495,000. And the sick and post-employment benefits, so the cost or service cost for the year for employees for another year of service and entitlement to those benefits was 418,000. So overall, the other revenues are 14.3 million this year. Last year was 27.3 million. And the significant decreases there in the government transfers for capital last year at 23 million. And that related to, obviously, amounts for Simmons in the previous year. Those amounts for Simmons last year in terms of money from investing in Canada infrastructure was over $14 million, so a timing of that. So the overall annual surplus this year is 14.4 million, 30.7 million last year. So again, I do tend to have people focus on the operating surplus because that other revenues and expenditures can fluctuate, a lot to do with capital projects that you may have. So that's being added to increase your accumulated surplus now to 258.6 million. So then I'll get you to skip over a few pages and just a few additional comments that I'll make on a few items here. So on page 13,
I'll just look at that. Where is it?
page 13, which is note number 5 on cash and bank indebtedness. So as I said, there was a significant change there in terms of having money overall in the bank accounts at the end of the year to showing a net indebtedness. So at the end of this year, almost 21.8 million was drawn on various lines of credit or overdrafts. So that has impacted that. But as I said, last year, you had borrowed additional funding and had that on hand at the end of last year.
And that's page 19 of our digital copy.
Okay. Then we'll go to note number 7, which is on my copy, page 15. So this is the government funding receivable.
Page 21 in our copy.
Okay, page 21. So at the end of March, there was, as I mentioned, about $10 million outstanding from various levels of government, down from $12.9 million last year. The biggest portion of that is the Investing in Canada Infrastructure, ICIP, 3.4 million this year, 5.3 million last year. Of that 3.4 million this year, 2.9 million of that is Simmons, just kind of that final outstanding balance. The province of PEI relating to Fiona relief and cleanup costs, what's still remaining is about 2.8 million from the province. The municipal capital expenditure grant, or the 10% of capital funding, what was outstanding is about 2.7. And then another $1 million outstanding, and that would be funds for the transit subsidy, for some of the gas tax funds, money for guns and gangs funding, so about $1 million outstanding. In the next note, which is investment in the government business enterprise, as I said, which is the city does own 15% of Charlottetown Area Development Corporation. On the next page, it shows that about 1.1 million was the net earnings for CADC for 24-25, and the city's portion of that 15% would be 165,204, where last year that was 204,000. I'll skip over another couple pages. So my page 18 is identified as the accrued pension asset or liability. So on note number 9, page 18, this is the city defined benefit
24.
plan. Page 24?
For the digital copy.
Okay. So this is the city pension plan. So the first numbers are the fair value of the plan assets, essentially the investments. So they're at 133.3 million at the end of March. The accrued pension obligation is 117.5 million, essentially what is owing to employees at the end of the year. And then there's various gains or losses of about 6 million. So the net amount is 9.7 million, so obviously fully funded. We don't show any sort of amount of that as an asset in the city consolidated financial statements because that obviously is not accessible and cannot be used for operations. So we don't show that 9.7 million, but it's provided here for information to obviously recognize that, of course, that the plan is in good financial position and is fully funded. On the next page would be then the details of the Water and Sewer Corporation defined benefit plan. So the plan assets at the end of March of 2025 were 10.6 million. The accrued benefit obligation, what was owing to staff based on years of service, would be about 9,020,000. There is some adjustments for gains and losses of about 1.2 million. So there is a still positive overall balance for the Water and Sewer Corporation pension of about 368,000 this year. So again, it's fully funded. We do show the overall net increase of that pension plan of 495,000 in the financial statements for the Water and Sewer Corporation. On the next page, note number 10 is the deferred revenue. As I mentioned, these are various revenues that you have received funds before the end of March. $10.4 million. The biggest portion of that is the Canada Mortgage and Housing Corporation. As you can see, about $5 million. So you've received an additional $2.5 million under half for the Housing Accelerator Fund. So you have $5 million outstanding. The Canada Community Building Fund, you have about $2.8 million to carry forward. The SURF Special Events Reserve Funds has about $1 million to carry forward, and then there's other smaller amounts there as well. But those are the three significant amounts of funds that you have at the end of the year to carry forward into this year. So that's $10.4 million. So of the Canada Community Building Fund, you received only $163,000 during this year. Spent about $1,280,000. The biggest portion of that was about $1 million on the Victoria Park shoreline work that was completed this past year, and earned interest of about $94,000. On page 22, which is note number 11, the sick leave and post-employment benefits. Again, that would be page 26, maybe?
28.
Sorry.
Page 28.
28,
Of
okay.
our digital copy.
So this reflects the obligation that the city has for permanent employees for sick leave, which is now an obligation of $3.9 million, and post-employment benefits, which is based on years of service when employee retires and is eligible. That is also an obligation of about $3.5 million, a total of $7.4 million, an increase of about $420,000 for another year of service. On the next page, page 23, is the long-term debt. So again, this would be on a consolidated basis. So these would include the amounts we just saw in water and sewer, and now the portion that is also for the city. So the total is $131.2 million. The previous year, that was $127 million in total. So the first line there, you can see the Royal Bank, the banker's acceptance has increased from 39.8 to 49 million. So there was, as I mentioned, another $10 million borrowed or advanced during the year. And the other significant advance during the year is close to the bottom. So that's the Federation of Canadian Municipalities, 1.6 million that was borrowed. And the rest of the loans, as you can see, have all decreased with obviously making regular repayments during the year. On the next page, continuing of the information on the long-term debt, we'll show you what is the overall principal obligation over the next 5 years, increasing from 7.2 million to 8.1. This would be, again, city and water and sewer, and increasing over those times with obviously an increase in the amount paid in principal. And then the thereafter amount after 5 years at 92 million, because obviously all the loans are not due within the next 5 years. Note 14 is the contingencies and commitments. So the first one is the property tax relief, which is provided for various properties. So that was a reduction of about 1.1 million this year, 1.17 in the previous year. C, under the Capital Area Recreation Inc., or CARI, so the city is responsible for providing 87% of the capital addition or replacement costs. D is the lease commitment, so there is a rental for office space, so there is an obligation for the next 2 years relating to that. Continuing on the next page is then the transit service. So that agreement obviously has a contract. This year, the annual subsidy to Trias Tours was $2,589,000. And in 2024, that was $2.5 million. And F, the city contracts. So for the next year, the city has committed $7.3 million. Water and Sewer has committed $5.3 million for capital projects in this fiscal year that we're in presently. The next item I'll refer you to is on page 27 in my copy, note 16, the government transfers for operations. As I mentioned, that was a revenue line that did decrease, and that was mostly relating to that last line, the CMHC, the Rapid Housing Initiative, of $5 million revenue. We also had the corresponding exact same amount of expenditure of $5 million. The government transfers for capital, as I mentioned, were $9.4 million this year, $8.1 million from investing in Canada Infrastructure, $1.2 million of gas tax funds or Canada Community Building Fund. And last year, the investing in Canada Infrastructure was approximately $19.1 million. Again, a lot of that to do with Simmons being the largest contribution relating to ISIP, or Investing in Canada Infrastructure. So of the $8.1 million this year, that related to about $3 million for Simmons, $1.9 million for new buses, $1.9 million for Eastern Gateway, and also approximately $1.3 million was relating to water and sewer projects. And the Canada Community Building Fund, the 1.29 or 289, as I said, most of that was 1.1 million was for the Victoria Park shoreline protection. And at the bottom of this page is then the accumulated surplus, again on a consolidated basis. So overall, we had reflected on the statements a surplus of $258.6 million. The majority of that, as you can see, is a line identified as investment in tangible capital assets. So that money has already been spent, has been invested in that various infrastructure that you have at $256 million. So the unrestricted surplus that you have available on a consolidated basis is $1.6 million, which has improved from the deficit of the previous year of $2 million. As we just saw on the Water and Sewer Corporation, though, it has the majority of that surplus. It was about $15 million. The next item I'll refer you to is on page number 30, which is the schedule of the tangible capital assets. So this is for the year ended March 31st, 2025, which shows you all the major capital assets, the major infrastructure of the city of Charlottetown. So that includes land, land improvements, buildings, road infrastructure, motor vehicles, fire trucks, streets, sidewalks, and storm sewers. So at the beginning of the year, the cost of all that major infrastructure is $322 million. The additions during the year, as I mentioned, are about $67 million. Under the buildings, the $34 million, that would be Simmons, would be the majority of that. There's $13.7 million under road infrastructure. Under motor vehicles, the $4.6 million would be the 1.9 of new buses and new public works and other vehicles added. And streets and sidewalks of about $2.8 million. So a total of $67 million of capital spending during the year. And so now at the end of the year, the cost of all those assets is $366 million. During this year, the amortization or depreciation is about $9.2 million based on those assets. On the next page then is the Water and Sewer Corporation assets, as we just saw, an addition of about $5.4 million for a total cost of about $201 million. And then we also reflect here, because these are the consolidated statements, carry assets at $29.3 million. 80% of Eastlink assets at $5.8 million. So a total investment cost of about $602.7 million of all those assets. And as I said, a total investment additions during the year of about $76 million in total. And the amortization in the year at about $13.7 million based on those assets that are available for in use during the year, and obviously at different rates depending on the nature of the particular asset. The last item I'll refer you to is on page number 34, which does provide segment operating disclosures and kind of a breakdown by each of the areas in terms of the revenues generated, the expenditures for the year. So for general government, we can see the revenues are 72.4 million, which of course is majority of property taxes and the municipal support grant. Expenditures at $22 million between salaries and operational costs, interest, and amortization. Protective Services has revenues of about 2.3 million. Expenses between salaries and operational costs of 19.3 million, so a net cost to the city of 17 million. Street maintenance and environment revenues from parking of about 1.2 million. Salaries and operating costs 17.3 million, so a net cost to the city of 16.1. Parks and Recreations generates revenues of about $6 million, but between salaries, operational costs, and amortization of a total of 12.7 million, that is a net cost to the city of 6.7 million. And then development, heritage, and other generates revenues of about 4.6 million. The expenditures of salaries, operational costs, and then the tourism accommodation levy grants, that is a total of 14.6 million, so a net cost to the city of 10 million. And then the water and sewer generates revenues of 14.1 million from sewer billings and other revenues, has costs of $14 million between salaries, operational costs, interest, and amortization. So leaving kind of a net amount of $145,000. And the difference between what we just saw in those unconsolidated financial statements is that does include the $1.3 million, which is the fire protection amount, which just basically comes from the city to the water. So we're trying to basically show each one on its own. And so we can see overall, when all of them combined together, that net operating result, as we just saw, is $96,000. Water and sewer has created the majority of that, with actually the city having an operating deficit overall. So those are the consolidated financial statements for the city of Charlottetown for last year. I'll open up the floor for any questions.
Any questions? Do I still have Councillor Tweel, Bernard, Duran, and the deputy there?
Yes, I'm here, sir.
Okay,
I'm here.
okay.
Yep. If there's
No, I'd just like to
questions, I'll
say-
move it.
I'll have I have a question.
Councillor Tweel, can we just get a question from the chair of the committee, Councillor McAleer, and then we'll follow up with you right away.
No, we can go to Councillor Trill. I was just going to make a comment, but we had, a good go of this yesterday at the Finance Committee, and I know for the rest of the council who's here and who's online, go ahead.
Councillor Tweel.
Thank you. Once again, Michelle, thank you for your presentation. Very, very informative, very detailed. I think I ask this question pretty much every year. When you take into consideration the management letter, if you were to give a thumbnail sketch as to what recommendations you would put in place if you were a decision maker with City Council, what those recommendations consist of?
Well, I think probably the biggest ones, and it's probably the most impact in terms of our work, obviously, with the audit, would be obviously, there's been challenges in the last year in terms of resources in the financial department. So that has an impact in terms of, the timeliness of this, and also has an impact in terms of, as you just saw, a number of amounts outstanding at the end of the year that, doesn't have the resources to follow up with those, to basically have, those monies coming into the city and helping with cash flow. Those would be kind of the bigger items. The next one probably is, as you can see, it's pretty slim in terms of what the overall surplus is at the end of the year. Obviously, every year expenses go up because of inflation. You're always going to have that. So I think the main challenge to the city is probably, managing that, and probably more needing is to have a serious look at revenues and trying to obviously make sure they maintain with obviously the increase in expenditures every year.
Okay.
Good, Councillor Tweel, you want to follow up?
And if you were to compare water and sewers statements versus city government. There is a much bigger surplus with water and sewer. Every year we increase the water and sewer payments. The ratepayers have to pay to the city. We put it up. I think it's 2%, 5%. Do we need to keep doing that? Do we need to keep going back to the taxpayers, asking them to contribute that money, even though it might be done incrementally? From your perspective, does that really need to happen if we have a pretty good surplus in water and sewer?
Well, I think I would like to refresh just the last statement I went over there. As we just showed, really the water and sewer surplus is only about $145,000, excluding that fire protection amount. So, that again is also pretty slim in terms of what the surplus is, and that's including a 3% increase and a significant number of development, within the city in terms of additional water and sewer units. So, without that 3% even last year, you probably would have been in a deficit. And as I mentioned, every year you're, forced to see increases with everything, as everyone is at home. Inflation has an impact on everything. I mean, obviously, you just settled a strike that obviously is going to be an additional cost. So there's got to be, increases, I think, every year, because otherwise you're never going to keep up with those increasing costs. And I think it's easier to do smaller increments to residents rather than leaving it for a number of years and then having to do, 20 or 25%. I think it's easier to do that. And I think it's just a requirement because costs continue to go up each year.
Okay. Just to follow up, Mr. Mayor, with the emphasis and pressure for municipalities to facilitate more construction in the city, and then the emphasis on our infrastructure, which we seem to be playing, and we are playing catch up on an annual basis. Tremendous pressure on infrastructure requirements, whether it be streets, sidewalks, major projects. We have a number of them in the queue. How realistic and reasonable is it for the federal government, for example, to say, well, here's a few dollars, the accelerator fund. We want you to build. Yet it is tremendous pressure on different governments within the municipality. You need more police officers. You need more firefighters, more fire stations, more recreational facilities and venues. If you were advising council, you got the other two levels of government, particularly the feds, that is pushing for more development. How are we supposed to be proactive, incurring those expenses, and yet having a reasonable surplus where we're not always behind the eight ball?
Yeah, I mean, it's really about looking forward and what is the impacts and implications of that capital spending, because it is going to create additional costs, as you say, whether it's police or fire or, other infrastructure or services that have to be provided for, increasing the number of residents within the city limits. So, I think any decision that has to be made on capital projects, it can't be isolated to just the cost of that project. I think there has to be some holistic and, further consideration of what is the impact of that, and that has to be taken into consideration in the budget, and whether that means continuing to increase water and sewer costs or looking at the property tax rates. I mean, those things have to be, I think, combined together in that final decision.
Okay. Well, thank you, Michelle. Thank you.
Michelle, could I just ask you to go to page 30? It's page 36 of our document. So, no, on the digital copy that we have is page 36. Her page is the paper copy. It says in the second column, additions to capital assets, correct? 67,275,000.
Yes.
And that's both utility and city core, right?
No, that's just the city. The next page includes the city corp of about 5 million. So it's 72 in total.
Total.
Yeah.
So, and what was our total budget for capital projects for 24, 25?
So the total budget on a consolidated basis for 24-25 was 123.3 million.
Right. So off that consolidated 123, we spent
72.
72.
Yes.
So that, and that's why I go back to fiscal services, that like we, in our budget for 2024, 2025, we budgeted 13 million because we're basing that on the depreciation, interest on long-term debt. I think we set it at about 10%. We once spent, what we budgeted was $13.5 million. That,
The amortization side would be accurate because that would be based on what actually projects would have been completed and then ready to use.
right,
It could in fact have been much higher than if you did in fact
Spend the whole
get
amount.
to the 123 million. That could have been like 15 or 16 million of depreciation or amortization based on that total capital project budget.
okay. And my last question is on the,
Just a quick,
just, Councilor Bernard, just one sec. On the cap, on our net debt, it's 131 million.
Correct.
But under the MGA, we base that debt, any debt ratio to our total assessment. And that was a question I asked yesterday. And I believe our total assessment for all properties, this is not totally like 100%, there's some other numbers, it's about $4.4 billion. So under the MGA, if we're up to 12% of that MGA or that ratio, then we're out of, we're getting into that red line, into the danger zone.
Right.
When you look at our debt and compare it to our total assessment, are we 2% of that
It's
ratio?
about 4%.
So we're still in good position?
Yeah.
That's my question.
Yeah.
Yeah. Councilor Bernard?
yeah, I just want to go back, Michelle, to what the mayor just brought up. I think what he's getting at is, so there's 123 million of capital, 76 got spent. That 76 is between city capital and water and utility,
Correct, yes.
correct?
Yes,
So whenever we would have budgeted 123 million, in operation, we would have set aside the payments for 123 million. Even though, so now we only spent 76 million, so that's what you're showing. So I think what the mayor's getting at, there should be a surplus of what we would have budgeted operationally and make the payments, the capital payments.
right. If that's how you had budgeted to also set aside for depreciation and additional interest costs, yes.
That was my understanding of what we were doing.
Yes, okay. Yes, that's right, yeah.
Any other questions? Yeah, we do have a
If
resolution.
not, I'll move to accept the audit.
Okay, so can we just get the CAO to read the resolution and then we'll call the question if it's okay?
Yep.
CAO, you got a live mic there? Have a seat there, sir. Yeah.
Your Worship, Finance, Audit, and Tendering Administration Resolution, moved by Councillor John McAleer and seconded by Councillor Norman Beck. Let it be resolved, the council approves and accepts the 2024-2025 City of Charlottetown Consolidated and Charlottetown Water and Sewer Corporation audited financial statements as presented by Michelle Burge of MRSB.
Look at that, Michelle, you're right in the motion, huh? You're going on the public record. Questions called, all those in favor? Councilors Beck,
Aye.
Councilor Ramsey, Councilor McAleer, Councilor Bernard, Councilor Duran,
In favor?
Councilor Twill,
In favor?
and Deputy Mayor Yankoff.
In favor.
Okay, and I think we have one item left, motion to adjourn. Moved by Councilor Ramsey,
Moved.
second by Councilor Bernard, all in favor?
In favor.
In favor?
Thank you very much, have a great day, God bless.